What did you learn this week? There was testimony from Jay Powell. There's more information on inflation. There was Bitcoin. There's a rally to all-time highs in the market. What did you learn?
I learned that the stimulus continues to fuel a better economy. The economy is humming along. We do have some inflation, as Rick just mentioned, on core PCE. I am not in the camp of it being transitory. I think the commodity side is transitory. I think wages are not. Add it all up, and then you have low yields. Even at 1.53 on the 10-year today, it's still incredibly low. That, to me, Tyler, is Goldilocks.
Goldilocks, says Stephanie Link, Ron Insana. What do you see? Do you see Goldilocks or the three bears?
No, I was actually about to use the same expression, Tyler, and without coordinating with Stephanie. I think, look, if wage growth is not transitory and the commodity side is, it means that individuals have more purchasing power, and that's relatively healthy. It doesn't necessarily mean a wage price spiral. It means that after we get through these supply chain disruptions and other shortages, it's altogether possible that we'll see an economy that is reasonably strong over the longer period of time. I would disagree with Rick about debt killing growth. We don't have any evidence of that quite yet. In certain circumstances in other countries, that's been true. Hasn't been true here yet. It may be someday in the future. But I think we're in a pretty good position. I mean, the Fed's effectively on hold, irrespective of some of the comments we've heard. And you know, the one thing about the stimulus that's coming through, it's coming in at a smaller than expected size when it comes to infrastructure. That's less pressure on the bond market. That's keeping rates lower than they would have otherwise been. So, yeah, I think we're in a pretty good spot as far as the financial markets are concerned.
It's interesting. You forecast my next question, Ron, which was going to be, I mean, some people could say that far from crimping growth, debt actually expands growth. And yet, of course, there is an argument that down the road it could. Stephanie, do you want to react to that?
Yeah, I mean, I think we obviously have the deficits are a concern, but as I've said before, I don't think that we're going to have to deal with it. I think my child, who is 14 years old, or my daughter is 14 years old, they're going to have to deal with it. So I think we're kicking the can down the road. Interest rates remain very, very low. If they do spike, then we're going to start to hear more and more about it. But back on the infrastructure plan, obviously having it bipartisan is a really good thing to have Congress agree finally on something, and we all know it's very much needed. But Tyler, I just want to mention, I think a lot of the reason why they got this done is because it helps jobs, right? I mean, if there's a multiplier effect in the industrial part of the economy, for every one job that is created, 7.7 jobs are created around it. So one way to get the 9 million people that are unemployed into being employed, I think this is going to be a very nice tailwind, and I'm looking forward to seeing some better employment numbers down the road.
Shepard Smith here. Thanks for watching CNBC on YouTube.